Hello and welcome to the Opening the Gates Q3 2025 UK property market update. I'm going to be covering off exactly what's been going on from house prices to activity levels, transaction numbers, mortgage approvals, inflation. I'm going to be comparing Q3 to Q3 of last year, the previous quarter, the 6-year average. We're also going to delve into some September and year-to-date figures as well. So if you're looking for the most comprehensive UK property market overview, you're in the right place. So I'm going to jump into it and start sharing a screen. So Q3 2025 UK property market update. Let's just zoom out a little bit on this. There we go. So for those of you who are new to the channel, hello, welcome. And for those of you who've come back, God knows why you're doing that. Jokes aside, from left to right, you've got Q3 25 versus Q3 24. Middle is Q3 versus the previous quarter of Q2. And then right hand side is Q3 25 versus the 6-year average for Q3, so 2020 through to 2025. So to start with, we've got on the market, which means properties for sale. So up 6% on last year, almost 1% up on the previous quarter, and up a whopping 21% on the 6-year average. According to home.co.uk, stock levels are at their highest point in September since 2013, so a 12-year high. You'll get bored of me saying this for those of you who watch each month, but more choice for buyers, more competition for sellers. That's why we're in such a price-sensitive market. But those who are pricing sensibly are getting their property sold because there is lots of buyer demand out there because of the increased choice in the market. So the stock levels are at a healthy amount. They are not getting to a crazy number that is going to cause house prices to plummet. So we've still got a relatively even supply demand level in the market. So on to new listings, 1.5% up on last year. It's a slight increase, down 8.2% on the previous quarter. Not unsurprising because of the seasonal trends. So Q3 made up July, August, September. August typically being a very quiet month, get your words out, when everyone goes on holiday. And then up almost 1% on the 6-year average for new listings. So again, a steady supply of property coming to market. Everything that's been going on. Obviously, recently we have had the announcement of a budget at the end of November. We've had speculation on tax reform. So those are things that could impact the market. I will come into this in more detail as we run through the recording. But there's some pretty good levels there and continued resilience, as I always say, in the UK property market. And speaking of resilience, almost 4% up for sales agreed year on year, which is a great return. Down 4% on the previous quarter. Again, seasonally, that's to be expected. Slightly disappointing that sales agreed figures were 1.5% down on the 6-year average. But again, there's probably going to be a few sales missing because of the announcement on potential tax reform and the budget looming. So if you'd said to me before doing the research and collating the data that sales agreed would be 4% up on a year ago, I think agents would snap your arm off for that. So pretty positive. In terms of price reductions, 10.5% up on last year. So price reductions are continuing to go up over and over. 2.4% down. Again, seasonal trend. You're going to find there's less price reductions as people have gone away for holiday, but they are up a whopping 31% on the 6-year average for Q3. So there are more and more and more price reductions happening. I'm a broken record when it comes to this. The glass half empty would say price reduced properties are less likely to sell. If they do, they take a lot longer. They're more likely to fall through. They're more likely to have to change estate agents. There's lots of negative connotations around it. The glass half full rather than half empty would say sellers are coming around to the idea that they're too optimistic on price. They're listening to market conditions. They're listening to the estate agent. They're adjusting their price, and those price reductions are actually meaning there are more sales being agreed. Because if they weren't being price reduced, stock levels would be even higher, and the sales agreed numbers would be lower. So a bit of a balance there. Withdrawal numbers are down 7% year on year, 5% month for Q3 versus Q2, but 6% up on the 6-year average. So there is a trend there that fewer withdrawals are happening. It feels like more properties are price reducing, committed sellers in the market, rather than just them saying, "Hey, I'm not getting my price, I'm coming off the market." They're deciding to take positive action and altering the price, which is good news there. So less withdrawals happening, more price reductions happening. That has meant that there is an increased stock level, as I've already touched on, and sales falling through is also going to increase stock levels as sold properties come back to market. So fall throughs down year on year, quarter versus quarter, and the 6 year average. I say it every time. If you're not utilizing reservation agreements, do go check out Brian Mansell and Gazelle. What I'd also say is the longer a property is on the market, the more likely it is to have a sale fall through. And if you're not getting your sellers legally ready from the start, you definitely should be doing it. In terms of fall throughs as well, I was just watching Matt Giggs' Estate Agent Showdown podcast. I can't remember the name of the two ladies on it, but one was a sales progressor and one was a surveyor. I would definitely recommend checking that out because there's definitely some tips you could learn in that in terms of trying to reduce your fall through rate. Relisted numbers have gone down across the board, which is interesting. So it looks as though at the moment sellers are not coming back to market who've tried before. They're perhaps looking at the looming budget, tax reform, speculation, gone. Maybe now's not the time to put the house on the market. So that has reduced. The numbers had increased in recent updates I've done. So it shows that there is some hesitance in the market as well. So I'm just going to go look over at my other screen just to advise on some other bits. So I've got the Q3 update on the screen, but on my other screen, I've got some September data and some year-to-date data. So September was the best September for new listings since September 2020. So best September for new listings 5 years. The best September for sales agreed since 2021. So best September in 4 years. Highest number of price reductions in a September on record I can find. Withdrawals are actually at their lowest level since December 2023. And sellers relisting their properties has gone down 2 months in a row. It's actually at their lowest level that I've seen in recent years as well. So I've spoken to a lot of estate agents recently where they've said tax reform speculation, budget coming up. They feel like the market, the taps turned off. There's definitely a market out there looking at these numbers, particularly for new listing numbers. Best September in 5 years, best September for sales agreed for 4 years. Price reductions are happening at their highest level. I can't remember the exact number, but there was over 100,000 again in September, which is like the fourth or fifth time this year that has happened. Withdrawals at their lowest level since December 23 shows that sellers are committed. They're sticking to market. So there's lots of positives out there. So just gonna read through some other bits. Let's just try and find where I've got to with this. Where are we? There we go. Year to date. So year to date, properties for sale, 7.5% up on last year, 23% up on the 6 year average. New listings are 3.5% up on last year, 10% up on the 6 year average. Sales agreed are up 5.5% on last year, 3.5% on the 6 year average. Price changes are up 13.5% year on year, and a whopping 38.1% on the 6 year average. Withdrawn properties are up slightly at 0.8% on last year, and year to date they are 13% up on the 6 year average. Fall throughs are up 8.8% year on year and 7.1% on the 6 year average. And relisted properties year to date are down 2.2% on last year and 0.1% on the 6 year average. So just to confirm, that's year to date, so January through to the end of September. So again, some positive numbers there in terms of new listings, sales agreed, markets moving in the right direction, although there's obviously some uncertainties out there. Right, scroll through to the next page. So new listing, average asking price. You can see that probably the more sensible asking prices actually in Q3 compared to Q3 last year has meant there's been more sales agreed. So there's more competitive pricing, which is good to see. Again, it's dropped on Q2. That's perfectly normal as a seasonal thing. Pounds per square foot though has rocketed quite a lot, going from 371 to 392 a square foot. And then on sales agreed, we're looking at 363.5 versus 360 a year ago, and only slightly down on 368 of the previous quarter. So it shows that house prices are actually moving in the right direction. Those that are priced well, presented well, low in supply, high in demand, buyers are buying them and paying good prices for them. So, right sort of properties marketed in the correct way are still growing in price, albeit modestly. And an average pound square foot has gone up from 336 to 345. So, yeah, average pound square foot moving in the right sort of direction. So it shows that there is single digit house price growth happening, which we'll probably see in the indexes that I'm going to be running through in the next few minutes as well. So, modest house price growth is good for a market. It means that existing owners can build up some equity, therefore they can move on. If you get negative house price growth, that means reduced equity. People are perhaps less likely to make a move. So see it as a positive. Right, mortgage approvals. So whilst this is on the screen, I'm just going to reel off the numbers from my other screen. So August mortgage approvals for house purchases were only down 0.45% on the 12-month average. They're 1% lower month on month and 0.31% down year on year. So um, pretty static source levels on mortgage approvals, which again I think is very good going considering everything that is going on at the moment. And actually, on the 10-year average for August, they're 2.54% up. So positive news there. In terms of the effective interest rate, I haven't got this on the screen, but that's the actual interest paid on newly drawn mortgages. It decreased for the sixth consecutive month. So it shows that interest rates are moving in the right direction. It went from 4.26%, to 4.26% in August from 4.28% in July. The rate on its outstanding stock of mortgages increased slightly though from 3.88 to 3.89, which is going to be expected because we've still got quite a lot of people coming off of fixed rates who fixed before interest rates started going up again in whenever it was late 2022. Transaction numbers. So just to confirm, mortgage approval numbers. So that's mortgage approvals on sales agreed, which is a future indicator. We've now got transaction numbers, which are highlighting completed data. That is going to be a lag because of completions. If it was in August, for example, probably got sale agreed 5 months before that. But I've been monitoring this for a long time now. And when you look at mortgage approval numbers and then look at the transaction numbers, they tend to marry up several months away from each other. About a third of the market is cash or cash from sale as well. So it gives me a good idea when I see how many mortgage approvals are going through each month. If you look forward 5 months, the transaction numbers normally marry up a fair bit on that. If anyone's got any questions, please do reach out to me. So, transaction numbers. Uh, Transaction numbers from HMRC for August decreased 2% month on month, were 5.65% down on the 12-month average, 1.5% lower than the August 10-year average, but they were 1.75% year on year up. And it's actually the best August for transactions since 2022. So I'm trying to see the positives in that. Financial year to date, which is April through to August, transaction numbers were 5.71% down year on year and 8.51% lower compared to the 10-year average for the same period. So, in terms of transaction numbers, um, moving in the right direction on that. Again, there was a bit of a hangover from the stamp duty deadline at the end of March. But yes, we're not at where we were during the pandemic, obviously, with everything that was going on there. And we're not quite at the levels we were at pre-pandemic in sort of 17, 18, 19. But we're not far off. And if you consider affordability, house price to earning ratios, interest rates, at the moment compared to the pandemic market and pre-pandemic, I would say that that's a pretty good result from the market all round. Inflation is at 3.8%. So I think it's at an 18-month high from memory. So just look at the other screen. So static at 3.8%. And yeah, that's the highest it's been since January 2014. So give or take about 18%. And slightly above the average of 2.9%. Um, we're thinking it's going to peak around the 4% sort of mark before hopefully next year returning down to the 2% mark and the benchmark that the government has set out. So Fingers crossed on that. For those of you who've not heard me say before, inflation over the past few hundred years has averaged 5.5%. And obviously, we had double-digit inflation only, when was it? Still in March 23. So late 22, early 23 had double-digit inflation. So considering it is half of what it was, is positive news there. Onto the house price indexes. So you've got Rightmove average price at 370. So monthly change of 0.4% and annual down 0.1%. Zoopla was static monthly and 1.4% up annually, so 271,000. Land registry really, really positive there, 0.3% monthly growth, 2.8% annually. Nationwide, 0.5% up monthly and 2.2% annually at 272. Again, strong numbers. Halifax strong numbers at 299, up 0.3% monthly and 2.2% annually. eServe, which is normally the more negative one, as I say each time, at 353. Monthly numbers static and down 2.8% annually. And then home.co.uk, that has been on holiday for a few months now, back with a 0.3% reduction month on month, but annually up 0.8%. So as we look at the numbers across the board and several different house price indexes, the average house price at 314,000, up 0.17% month on month and 0.93% annually. So again, as I said earlier on, modest house price growth, low single digits, is actually keeping the market moving, which is a good thing. So, going to finish off by going through the major house price indexes. So, Rightmove, Zoopla, Halifax, and Nationwide, and then the UK house price index. Over time, I have gone through other things such as eServe, Home, Property Mark, Bricks, etc. But I'm conscious quite a big update with Q3 and want to whiz through it. So, let's just zoom in on this. So, Rightmove House Price Index, so as I've already said, monthly up 0.4%. Asking prices have dipped 0.1% annually. And the data there was, I think this is the first time there's been an annual house price decline on Rightmove since January 2024, off the top of my head. If you want to check out those stats in more detail, make sure to check out my LinkedIn newsletter, which, if it's not already live, will be going live very soon. Number of sales agreed up 4% compared to last year. So strong numbers there from Rightmove. Again, all the uncertainty out there, really positive. So if I highlight this bit here. Rightmove's real-time data shows no immediate reaction from movers to property tax rumours. However, there are some jitters around what could happen in the autumn budget, with a risk of slowing to parts of the market that are already underperforming. I would have touched on it before, but London and the South, in the more stretched areas when it comes to affordability, are struggling, whereas your Wales, Scotland, Northern Ireland, north of the country, are actually doing much better in this market. So ahead of the September base rate decision, it was over a year since the first base rate cut in August 24. And Rightmove's mortgage tracker shows average 2-year fixed rate has reduced from 5.03% to 4.52%. So improved buyer affordability, sensible pricing, and as I've already touched on, a higher choice of property are actually encouraging people to buy, which really positive news there. There it is. So I said this earlier. Let's just hover over it. So this is the first annual price drop since January 2024. As I said, Rightmove said it's a combination of several months of competitive pricing by new sellers over summer. It is this attractive pricing, they see it as a positive, which has actually continued to drive stronger buyer activity and demand into the higher supply market, with the number of sales agreed 4% higher than this time last year. So again, we can sometimes think of house prices going down as a negative, but actually transactions are equally as important as prices. Appreciate that house prices in the newspaper is what kind of pushes sentiment, but obviously we want transaction numbers. We're on track, roughly speaking, for about 1,180,000 transactions this year, which I think will be a 5% increase on 24 and a 10% increase on 2023. So some really, really good numbers there. Bearing in mind, the long-term trend for transaction numbers is probably like 1.2 million, 1.25. So we're not far off, which is a good sign. I don't think there was much else to touch on uh, the right move house price index. I think that was it. Although this bit here, that's what I wanted to say. So in terms of the mortgage rates, for someone buying a home at the average asking price, this equates to a saving of just under £100 on monthly mortgage costs based on having a 20% deposit and spreading the cost of the mortgage over 30 years. So again, as I've already said, improved buyer affordability, pricing, sensible pricing and higher choice property are encouraging many to buy. So that 2-year fixed rate having reduced from having a 5 in front of it to a 4 in front of it, I think that's a real psychological barrier for many. Once we started seeing a lot more mortgages with a 4 in front of them, feel like a lot more buyers entered the market. So that is the Rightmove House Price Index. Let's go on to Zoopla. So Zoopla have reported 1.4% annual house price inflation. Um, in terms of house price inflation, we'll get onto it in a minute. But the lower end markets are unsurprisingly performing a lot better than higher end markets. So pre-budget tax speculation has hit activity for higher value homes. Demand down 11% for homes priced at £1 million or more, and there are fewer new listings at 500,000 as well. Zoopla have touched on mortgage rates being stable at 4 to 5%. Again, highlighting just like Rightmove, that's supporting demand. Anyone who's sat there waiting for mortgage rates to get any lower, again, read my LinkedIn newsletter. But when you look at how sticky inflation is, what gilts are doing, swap rates, etc., etc., lenders seem to have priced in as much as they can already. So it doesn't look like there's much room for interest rates to drop much further. But the flexibility on lending and stress testing and whatnot is helping buyers borrow more money. That doesn't necessarily mean that mortgages are going to be cheaper, but it is helping support demand in the market as well. And as rental prices continue to go up, and there is much more options for first-time buyers, particularly in the lower deposit market as well. That is going to help supplement market activity as well. What Zoopla do go on to say, as you'll see with the bottom bullet point, is market activity they think is set to plateau in coming weeks. Um, but serious buyers and sellers shouldn't put decisions on hold. Of course, we like to see that. So more sales agreed, but new buyer demand slips on budget uncertainty. So buyer demand is at 0.3%, new supply down 1%, stock of homes for sale up 8%, and number of sales agreed up 1% year on year. So there is activity in the market, but again, it goes to show higher stock levels means only those committed sellers pricing sensibly and showing buyers value for money are the ones who are actually moving. Average agent has 36 homes for sales. That's 20% more than 2023 and 8% versus a year ago. As I've said, Zoopla have reported that data for buyer demand and new listings for properties over 500,000 has fallen compared to a year ago as buyers are taking stock ahead of the autumn budget. And then they say a bit further down here. So 1 in 3 homes currently on the market for sale is priced above 500 with 8% over 1 million. Over the past 5 weeks, demand at the £1 million plus mark has fallen 11% compared to the same period last year. And then demand for properties over 500,000 is down 4%. So buyers are holding back, not unsurprisingly. Sellers also holding back as well. So 9% fewer £1 million homes and 7% fewer £500,000 homes hitting the market. So demand and new supply across the market, well, the rest of the market is actually in line with last year. So it is showing that Zoopla are highlighting that there's some budget speculation is having an impact on the higher end of the market, less so on the mainstream market. As I've already said, there'll be some regional impacts there as well. If I try and zoom in to make it a bit clearer. Zoom out a bit. There we go. So as you can see here, in terms of the demand and new listed levels, pretty static, below 500,000, but then reduced listings and demand, the higher up the market you go. Right. I've already touched on annual house price growth. So average house price growth in August was 1.4%, higher than a year ago, down from the 1.9% annual growth in December 2024. The average UK house price has increased by just over £4,000 and currently stands at 271,000. As I've already said earlier, affordability matters. So the house price rises are higher in the lower value markets. So if you've got someone over 500,000 thinking that their property has gone up by 1.4%, for example, uh, they're mistaken because that is an average and it's the lower end of the market that's performing better, which makes complete sense. Market was resilient in more affordable areas. So again, the house price earning ratios is less impacted. So the Scottish, Welsh, Northern Irish, and Northern regions of the market tend to do better in this sort of conditions. And then in lower interest rate environments, your London and your south of the country tends to do better. I'd probably say that on most updates as well. Already touched on this. So average mortgage rates. So Zoopla highlight here, top left corner, 4.1% is the average mortgage rate for a 5-year fixed rate loan at a 75% loan to value. And I already touched on this, but it'd be really, really important to highlight that bottom paragraph. Mortgage rates are stable. However, home buyers can afford to borrow 20% more than they could 6 months ago with the same mortgage rate and with the same income as lenders have changed affordability criteria. This is helping support demand for homes in recent months, especially amongst first-time buyers, as I said, and in areas with more affordable house prices. So again, don't let sellers read into that thinking that means house prices are just going to shoot up. It probably actually means that someone can buy a house that they couldn't have done so 6 months ago. It doesn't mean all of a sudden that their budget's gone up 20%. So rather than being 500, it's 600. It's just supporting more activity in the market. I would kind of liken it to when someone says, "Oh, if I put a lick of paint on my house and tidy up a few bits, what's that going to do to the value?" And you're like, it's not really increase the value, it's increased your saleability in the market. Zoopla's last bit. So the outlet, they say sustained upward momentum in housing activity over the last 18 months, which is positive. Will start to plateau in the coming weeks as budget uncertainty impacts home buying decisions. Not unsurprising there. Budget speculation is always a factor for home buyers. This year, possible changes obviously have heightened their consideration with what they are saying might possibly happen. Weaker demand and fewer listings of high value homes is driven as much by hopes of saving on stamp duty as concerns over what a new tax may look like. Activity across the market remains stable compared to a year ago, and prices are rising more quickly where there is affordability, reinforcing the north-south divide. And very good point from Zoopla. The last paragraph, it takes 6, 7 months to agree to buy a home and then complete on a purchase, and the budget is just 2 months away. So serious movers should not delay their decisions. And if you're speaking to anyone who's saying, "Oh, what might happen?" If you think of all the different things that have happened in the last 15 or so years, well, almost 20 years now, since the crash in '08, we've had Brexit, we've had COVID, we've had various wars. We've had cost of living crisis, inflation skyrocketing, interest rates soaring, etc., etc. Yeah, the property market is still here. We've still got over 1 million transactions happening. We've still got house price growth taking place. So it just shows that we're not building enough houses. We don't have enough supply. People are living for longer. Net migration's higher. Therefore, supply is not meeting demand. Basic economics, prices go up, and that tends to be the market that we're in. Right, moving on to Nationwide. Zoom in on this as well. So their annual rate of house price growth sits at 2.2% in September, similar to August. So it's at 272,000. Just going to read through what Robert Gardner says. So the broad stability in the annual rate of house price growth over the past 3 months mirrors that of activity. Number of mortgages approved for house purchase has been hovering at around 65,000 cases per month, close to pre-pandemic average, despite the higher interest rate environment. So 65,000 mortgage approvals. That's 2/3 of the market. The other third will be cash, which basically would bring you to the high 90s in terms of transaction numbers. And if I say 95,000, just calculating that, that would bring us at 1.14 million transactions. I said a few minutes ago, we're on track for about 1.18. So mortgage approvals, transaction numbers, I said that there is a correlation between them. That's all positive. Despite ongoing uncertainties in the global economy, underlying conditions for potential home buyers in the UK remain supportive. So, Unemployment is low, tick. Earnings are rising at a healthy pace, tick. Household balance sheets are strong, tick. And borrowing costs are likely to moderate a little further, tick, especially if the bank rate is lowered in the coming quarters, as we and most other analysts expect. Providing the broader economic recovery is maintained, housing market activity is likely to strengthen gradually in the quarters ahead. I can't recommend enough to be sharing this sort of data with your clients or potential clients as well to highlight to them there is definitely a market to be had. I won't go through the regional bits here. But I will scroll down here. So you can see here the best performing property over the last 12 months for house price growth has been semi-detached properties. So where are we? So most recent data from Nationwide has highlighted semi-detached properties seen the biggest increase over the last 12 months at 3.4%. Detached and terrace properties saw similar growth at 2.5 and 2.4% respectively. However, flats saw a small year-on-year decline of 0.3%. So there appears to be a lot more flats on the market, less demand for flats. In my LinkedIn newsletter update, there is some data there from Barclays on first time buyers actually jumping a step further in terms of their first purchase. And they're looking at something they can live in for the next decade. Therefore, they're skipping the flat and going straight into buying a two-bed house or a three-bed semi, for example. Hence why the semis and terraces have had the growth they have. In terms of flats as well, you perhaps traditionally think of buy-to-let properties, landlords exiting the market. So you've got landlords exiting the market, which is increasing the number of flats on the market. First-time buyers not buying them, investors less so buying them. Therefore, there's more flats on the market. There's not demand, which is why we're seeing the reduction in price that we are. So Nationwide go on to say, looking over the longer term, flats have seen noticeably weaker growth because of what I've just said, compared to other property types in recent years. For example, over the last 10 years, the price of a typical flat has increased by around 20%, less than half of the rise in the price of a terraced house over the same period. And you can see there that the growth that Nationwide has seen over the past couple of years. So some really, really good numbers there. House price to earning ratio again over the long term average, but lower than it was a couple of years ago, which has supported that demand in the market. And you can see annual house price change. Anything blue is good, and anything red is bad. There is no red on that map, which is really good to see. You've got the quarterly statistics here as well. So annually, quarter three, 2.3% up. Previous one was 2.9%, so a little dip there. And I think that touches on numbers there. Right, Halifax. So Halifax house price index at 299. Monthly change up 0.3%, quarterly 0.4%, and annually 2.2%. So some really positive stuff there. It's 3 months in a row now that their prices have increased, and it's actually a new record high for Halifax. There's some really, really positive data there coming out of Halifax. If I just read through what Amanda Bryden, the head of mortgages, had to say. So house prices rose again in August. Third consecutive month of increase. Average property price is now a record high, although annual growth has eased slightly. So, story of the housing market in 2025 has been one of stability. Since January, prices have risen by less than £600, underlining how steady the market has been despite wide economic pressures. Again, how steady and resilient this market has been considering the wider economic pressures, I really don't think that's spoken of enough. How unbelievably well the market has performed considering everything going on. Anyway, back to it. Affordability remains a challenge, but there are signs of improvement. Interest rates have been on a gradual downward path for nearly 2 years. Good news. And many of the most competitive fixed rate mortgage deals now offer rates below 4%. So again, there was definitely increased activity in the market when rates started having a 4 in front of them. If we still keep seeing some more with interest rates with a 3 in front of them, in the market, that will definitely be positive for activity levels. So combined with strong wage growth, which Nationwide touched on, which has outpaced house price inflation for nearly 3 years, which is a real positive. That's giving more prospective buyers the confidence to take the next step. Summer's typically a quieter period for the market. Again, I've touched on that. So the recent rise in mortgage approvals to a 6 month high is an encouraging sign of underlying demand. So mortgage approvals at 6 month high, really, really positive news there. from Halifax and nationwide. While the wider economic picture remains uncertain, the housing market has shown over recent years that it can take these challenges in its stride 100%, supported by improving affordability and resilient demand. We expect to see a slow but steady climb in property prices through the rest of the year. I think that's a really great way to explain it. Slow but steady wins the race. First time buyer affordability improves. Again, great news for the market. First time buyers are the most common buyer type in the market. They make up about a third of it. Without them, the market doesn't flow. So it's really, really good news there. So they go on to say overall prices have edged higher. Average property values for first time buyers moved in the opposite direction over the summer, a trend that will be welcomed by those looking to get on the ladder. For those able to overcome the hurdle of saving a deposit, numbers increasingly stack up. The typical first time buyer now costs 237.5, down 0.6% on May, and a 95% loan to value mortgage over 30 years could mean monthly payments of around £1,179 a month, and that's compared to the average UK rental of £1,343. So again, appreciate there's various different arguments on either side, but if someone wants to own a house and can afford the deposit, it makes sense to be paying their own mortgage rather than paying the landlord's mortgage, particularly when it is actually less per month and you're paying equity into a growing asset as well. So positive news there. I don't think there's anything else to cover off there. No, there isn't. Right, last couple of bits. UK House Price Index. So this was published on 17th of December. This is July data. So this is completed data from July. Probably got sale agreed 5 months prior. So it is going to be a bit lagged there, but it is the best source of truth when it comes to the UK property market in terms of completed data. We're not looking at new listings. We're not looking at sold subject to contract under offer. We're not looking at mortgage approvals. We are looking at buyers have taken the keys, completed on it. Surveyor has valued it. Lender has given them the money. Like it is all completed. So whilst it's a little bit out of date, again, you can actually track the different indexes that I've looked at, and you can see a trend there as well. So you can kind of predict what's going to happen a few months in advance. So 270,000 is the average UK house price, up 2.8% annually, 0.3% monthly. And if I just go on to the next screen, a year ago it was at 262.5. It's now approaching 270,000. So you can see that there has been some modest house price growth over the last year. Now, if I take that back, and I have no idea what this is going to show, March 2020, it was just over 214,000. We then kind of almost peaked in the market in the summer, autumn of 22. Prices then settled a bit, um, but didn't fall off a cliff like some predicted. I think transaction levels fell off, but house prices actually remained pretty static. And then they've increased after that recovery period of 2024 to where they are now at 270,000. So that is the Q3 2025 UK property market update. I hope you've enjoyed watching it. If you do have any questions, please do let me know. Make sure to hit the subscribe button if you're not already subscribed. If you like what you see, please do leave me a review on Google and share out this recording to anyone else in the industry that you think would benefit from watching it. I will be back in early November to report on the October property market. So we're going to be comparing October to previous Octobers over the years. We're going to be comparing it month for month to September. We'll also look at what's been happening year to date. And it'll be interesting to see if the looming budget and unknowns over tax reform is going to have any impact across October. But as always, thank you for watching. Thanks for the support, and I will see you in a month's time. Take care.